Hi, Patrick. Hi, Patrick. Good to see you.
Okay, we're
Awesome.
ready.
All right. So good morning, everybody.
Good morning.
Morning.
I think we're recording. We're going to start the informational hearing. Representative Walker, do you have anything to say?
I just want to say good morning to everybody. It's great to see everybody on Monday. So smiling like everything is raring to go for the week. So great to see. Wow, there's a whole bunch of people on today. Wow. I know everybody's dying to get back to the LOB. So this is like the prelude to that. We're hoping to continue that pattern. But anyhow, great to see everybody. Thank you, Madam Chair.
Senator Minor?
Good morning. Happy to be here.
Representative France?
Good morning, everybody. I look forward to the update on the UI and what the forward plan is. Thank you.
So, thank you, guys. Commissioner, my understanding is you have a PowerPoint presentation to go through. I know that people have a lot of questions. So start your PowerPoint presentation. I'm certain Sue has allowed you to share that. And if everybody could hold off on questions until the PowerPoint presentation is done, that would be great. And then we'll stick to the 2-question model initially.
Thank you, Senator. What I'd like to do, if it's okay with you, is give kind of a quick little overview and structural framework and then go into the PowerPoints, and it might help with some of the questions that would be coming, if that's okay with you.
As long as we have time for the questions, we don't want to spend all the time talking.
Absolutely.
I know that people have individual questions that need to be asked. So
Absolutely. So I'd just like to say I'm here with a few of my folks, Deputy Commissioner Daryl Dudinsky, Deputy Commissioner Mark Polzella, and we have some other of our directors here in case we need to reach out to them for further. So I just want to get us all kind of on the same page and give you a little bit of updated data and explain a few foundational concepts. If I'm talking too quickly, which I tend to do, and I know I'm sensitive to your time here, just give me a wave. So
excuse me, Commissioner, I forgot. Senator Kushner, do you have anything to say as the chair of labor?
Thank you, Senator Austin. You know, we are very pleased to see Commissioner Bartolomeo here, and congratulations on becoming, I think this is the first time I'm officially on a Zoom with you on becoming commissioner. You know, clearly there are many, many concerns. We know that the Labor Department struggled with all of the overwhelming need that we had in our state. And I know that ultimately you guys did a great job getting people, taking care of people, but now we are faced with these overpayment concerns. And I think that'll be a big part of what we want to hear about today. So thank you for joining us and bringing your team.
Representative Porter.
Thank you, Madam Chair. And I'll just echo the sentiments of my co-chair and also say congratulations officially to Commissioner Bartolomeo. And I'm just really looking forward to this report today so we can report back out to our constituents where we are and how we stand. So thank you, Madam Chair.
And I apologize, I don't know the ranking members on labor. Senator Kushner, if you could introduce them.
Sure. I know that it's, I don't know if he's here, but it is Senator Sampson. I don't know if he is with us. And I know Representative Porter would be introducing Representative Aurora.
Are either one of them on? I don't see them right now. If they come on, we'll introduce them. Back to you, Commissioner.
Okay, thank you very much. And thanks so much to these folks. So just to put it in perspective, since March of 2020, the total benefits that have been paid out that we've administered is $9.89 billion. 2.78 billion of that has been state funds and 7.12 billion has been federal funds. I know that we are focused on trust funds and overpayments. If we want, I have information to go back to through questions for job growth and unemployment rates, but I'll skip that right now based on some of what we just talked about. As far as the trust fund, it's important to know that the traditional state unemployment benefit system is an insurance program. And until recently with the federal programs, only those whose employers paid into the insurance program on their behalf were eligible for benefits. So PUA, for example, was an exception to this insurance program model that has never been before. Trust fund is funded by employer taxes. So some folks don't understand that, but it is not something that employees pay out. It's not payroll deductions. It's not state funds. It's not state taxes. It's employer taxes. The trust fund did not pay the federal programs like PUA, PEUC, MEUC. It paid a small portion of the extended benefits because that's a shared program. But the trust fund, it also did not pay the shared work program until recently. That was 100% federally funded until September 4th or 6th, depending on which way you're looking at it. The last time the trust fund was solvent was in 1999, and the trust fund pre-pandemic balance on March 2nd was $642 million, with a solvency determined to be at $1.7 billion. So we were just shy of 50% before we went into the pandemic. We did not begin borrowing until August of 2020. So we were okay for those first 5 or so months. And right now, the current federal loan is $532 million. I'm sorry, Senator? Oh, okay. The current loan is $532 million. I just want to point out that it had been higher, but we were able to pay $200 million towards that federal loan towards the beginning of October. We did have to recently borrow again, but what that did for us at about $13,000 a day of savings of interest, that we were able to save about $500,000 by paying down what we could, even though we then had to start borrowing again. So right now, $532 million is the current loan balance. As far as overpayments, and then, you know, I've got a trust fund PowerPoint and overpayments. As far as overpayments, it's important to know for kind of foundational, there are 2 categories of overpayments. There are non-fraud and fraud. They happen for a variety of reasons. So the non-fraud can be things like a claimant signs up, is deemed eligible, and then later on the employer received the PPP loan. And that means that they've now received wages from 2 places. So it ends up that there's an overpayment for their unemployment. It could be things like the employer did not respond when the first notification was sent out to them. It wasn't until later on. Some of that can be because they weren't concerned about the fact that their experience rate wasn't going to be affected during this time. So there was a lag in employers notifying us if they did not think that they should be accountable. There also are situations where the claimant could be entering in by accident, not knowing, not understanding gross, net, and you're supposed to be putting in net, they could be putting in gross. So there's a whole bunch of varieties of reasons that are unintentional. Those are non-fraud. When there's no penalty or interest on non-fraud. But there is for fraudulent, purposefully, trying to claim while working or something of that sort. There's no waiver possible, and they are subject to penalty and interest. It also should be known that we are held responsible by USDOL to collect non-fraud overpayments. We have to stay in compliance with that. And the feds have been very consistent with us, and we've actually reached out to them specifically on this. The pandemic itself is not a cause for a waiver in their eyes. And we do have to go through all claims and size them up against 8 reasons that we are allowed to waive. And those are when it's considered equity and good conscience would account for us not requiring a payback. So that is just kind of some foundational stuff. I will bring up with a shared screen this is interesting. I'm used to using Teams much more so than this, so please bear with me 1 second. Okay, I know that you probably are not, I'm going to guess that you probably are not going to want me to go through reading all of this. You've had this, but I will pick up on highlights. And please note that I cannot see you when I'm doing this. So if you could just let me know if you want me to stop or slow down or anything. I will go to slide 2 first, point out this is Public Act 21-5, which has made changes to experience ratings. There are 2 categories of changes that were dealt with in this legislation. One is for employers who have been employers long enough to be eligible to be experience rated with using multiple years, and then for new employers. So we did account for both of those scenarios, and that's spelled out in slide 2. I'm going to come slide 3, 4 and 5 will be summarized in slide 6. And I'll just use this. It recaps those. Oops, 1 second here. Let me make this a little bit smaller. Nope, wrong way. Okay. So this is slide 6 is speaking to Public Act 21-200, which is reforming the uninsurance program and bringing trying to bring the trust fund to solvency soon. It's important to note this is a compromise bill. There is an impact to employers and claimants, and we did work very hard with different parties, different viewpoints, employers, employee advocates, and so forth. So the UI tax changes certainly will affect employers because we remember that's an employer tax. Increasing the taxable wage base from $15,000 to $25,000. I also want to point out that had there years ago, after 1999, when the trust fund had been solvent, had there been indexing to inflation, it would actually be $25,000 today. That just had not been done. It reduces the minimum tax rate to 0.1 from 0.5%. It's increasing the maximum tax rate 5.4 to 10%, and reducing the maximum fund solvency tax from 1.4 to 1. Now, those are all extremely complicated concepts. If there's, a desire for additional information about what exactly those mean and what the effect are, we have Daryl Dudinsky and Carl Gazzardi that can go into some detail after for questions. It also, so that was on the employer side. On the claimant side, there's changes to UI benefits. And that's really important for this group to understand because we know that you will hear from potentially your constituents. And that was part of the compromised bill. So the employer taxes will gain about $130 million annually into the trust fund. The benefit changes will gain about $85 million annually into the trust fund. Important to know that right now, there is a minimum weekly benefit of $15 that someone can get depending on their wages for their benefit year for usually about 5 quarters. That's going to go up to $40. The minimum base earnings, they have to earn $600 in that base period. They will have to earn $1,600 in that base period in the future. Again, these are in effect in 2024. I should comment on. And there's also going to be a 4-year freeze in the maximum weekly benefit amount. So right now that amount can go up annually. May go up annually, and it will be frozen for about 4 years for that increasing. I also, guys, I want to say that the insolvency in the trust fund really does account for substantial cost to employers because, again, it's their taxes. So, for instance, in the Great Recession of 2008, Connecticut had to borrow $1.25 billion. And it took until till about 2016, about 8 years before that was able to be paid off. But the interest that accumulated to pay that off was $85 million. So it's really important. This legislation we feel is extremely important for trust fund, for businesses, for everybody, for the state. I'll skip to slide 8. Special assessment. That's a supplemental bill that gets it's charged to our contributory employers that pay into the trust fund. And that's when it's accrued when there's an outstanding balance, which we obviously have right now, through September 30th of each year. I want to point out that Governor Lamont, OPM, the administration, did this year use CRF funding to pay $1.085 million. Now there was tax-free borrowing until September 6th when the CARES Act ended. And so there was only a few weeks till September 30th. So it was $1.085 million. But it did mean it was significant because we didn't have to generate bills and employers did not have to receive bills this year. So the first time that they will be potentially responsible for special assessment interest payments is the beginning of 2022, unless there's some type of a policy change right now about funding. Slide 9 speaks to FUTA, which is how we pay back principal for the borrowing. The increased FUTA taxes are actually a reduction in a credit reduction. So it's kind of an odd inverse relationship. In 2023, employers will pay increased taxes for the calendar year of 2022. They'll be paying, after January in 2023. And that's, again, because of the FUTA tax credit reduction. This slide, number 10, a lot of information here for you folks. As I mentioned in the intro, trust fund last solvent 1999. The balance right now is, the balance pre-pandemic, what I went over in the beginning, 642 million, solvency was 1.7, so we were almost 50%. Here's the benefits that I mentioned that we have paid out thus far in state and federal. We began borrowing in 2020, the current loan, and the amount that we paid. So all of that I went over in the intro. That's all here in slide 10 for you. And just to summarize what this legislation did, your last page, the UI tax system and the benefit system had been unchanged since the 1990s. This was huge, and it was a collaborative effort. Johnny Dock from the governor's office spent a huge amount of time working with us and working with stakeholders on all sides of this issue. Basically this will, bring us to solvency in, years down the road, and it will help with employer costs and a lot of predictability. So this is a really great thing for business and for the state. Let's see, I'm going to go back to where I can see you all. Do you want me, Madam Chairs, to go right into the overpayments?
Yeah.
Okay.
Yeah. And then we're going to have a lot of questions. So how many more slides do you have here?
Overpayments, I'm going to fly right through them. And I don't even have to go over them if you want, if you think everybody's looked at them.
Well, they got them today. So.
Okay. So I'll just point out highlights. We typically had about 40,000 filers. We went up to almost 400,000 weekly filers in May of 2020. We're down to about 50,000 weekly filers right now. That's a combination of the regular unemployment program and the extended benefit program. I'll point out here, this is the 9.9 billion that we've been talking about. So there's about 1.9 million workers in Connecticut. 580,000 of those used the unemployment system at some point during the pandemic. We do want to point out that, as I said before, U.S. Department of Labor requires all labor departments to identify and recover overpayments. That is not our choice. It's not unique to Connecticut. As far as the non-fraud over, I'm on slide 4 now. Non-fraud overpayments. Again, some examples about if an employer does not immediately appeal or protest and the claimant is given benefits, that's one reason for overpayments. These are basically what I said in the beginning. The blanket waivers, I know that's something that was not really understood because the term blanket would imply that we could just scoop them all up, take them all up and wipe them away and forgive them. But actually, it's kind of a misnomer because there's only 2 circumstances that we are allowed to do blanket waivers. And otherwise, we still have to go through every single claim individually. And we did have and have had, not all states have, but a waiver program already in place prior to the pandemic. This slide is really just kind of an example of how we have to report. It's really for the feds. It's not overly helpful to you folks, but I'm showing you because the press did use this when overpayments became a big issue in the press recently. It's really used for gauging performance of how DOLs are doing. It does not match up necessarily to the numbers I'll give you because I'm giving you, I would have to say kind of more accurate numbers of what you're looking for. These include things that could have been on our books for up to 8 years at this point in time. So it's hard, it's not like a one-to-one relationship. The non-fraud overpayments as of September, only about 2% of our claims, around 13,000, are established right now overpayments. Now that number will grow simply because of the volume that we have and going through them. But right now that is about 30 million in overpayments. We've broken it down at your request, 10 million state, 20 million federal. Other programs have yet to, so this federal is like FPUC, the extra 300 and 600. There's other programs like PUA, which will be reported out at the end of 2021. So that is not included in there. As far as waivers, we give you kind of blurry copy here, it looks like on your slide. I hope it's a little bit better, but this is an example of what the waivers look like. And there are a variety of due process steps that all folks are eligible for. So there's first the appeals, there's and benefit payment control unit of ours that goes through the overpayments. When someone receives a notification of a potential overpayment, they are provided the waiver in that hard copy mail and can fill that out and send that back for consideration. If they are going to appeal the decision at that point, they also then can go to the referee level of our quasi-judicial appeals unit. They can then take that further to the Board of Appeals. Again, no waivers for fraud. And here is some information about the first level quasi-judicial. So if we've had about thus far until June 30th, we've had 1760 appeals involving overpayments. Now, I know you would probably like very detailed breakdown, but it gets complicated because only 28 of those that we've gone through thus far are single issue appeals, meaning just fraud overpayment decisions. 8 of them are single issue non-fraud overpayment decisions. You can see here what those 8 turned out to be. And then we have this thing called triple barrel, and that is complicated because there's 3 issues involved in this. So I do not at this time have, and I don't know when it would be possible. It's a very complicated thing to disaggregate this down into individual issues. But 1,615, so 1,615 of these were disposed with decisions. There's 145 of these pending, and of these referee decisions, 108 of them are going on to Board of Review. They've requested a further review. So that is that slide deck. I will stop sharing at this point.
Thank you for the data. We appreciate that. So I have a couple of questions that I'll start out with. On the unemployment trust fund, it's down to 500 and some $million. You said you paid 200 million on there. Does that 200 million include the 155 million that was in the ARPA funds?
That does not.
So it's actually 500 plus million minus the 155. Would that be accurate?
Yes, that is potentially accurate. Yes. So what's happening right now is that when we did the 1.085 million, it was after the feds clearly stated indisputably that we could use CRF funds to pay that.
That was for the interest, right?
That was for the interest, right?
Okay, I'm talking about the total dollar amount. The last number that we had gotten was over 700 million. You said that that the state paid down 200 million. Where did that 200 million dollars come from?
That was tax receipts. Daryl, do you want to speak more to that?
Yes, Commissioner. That came from the UI Trust Fund, which, to the Commissioner's point, comes from the employer contributions.
So it came out of the employer trust, the money that was in the trust fund, and so you paid 200 million. That brought it down to 500 million, give or take, and you'll have 155 million in ARPA dollars to be used to pay that down. When will you expect to pay that down using those $155 million?
Well, that's a collaborative discussion with OPM on exactly how much is used when and how. Daryl, do you want to speak any more specifically to that, or?
You're correct, Commissioner. As we receive guidance from OPM, typically that money, in this particular scenario, that money should go into the trust fund. And then from there, it's generally used to pay out benefits, which would limit our ability to borrow or diminish our ability to borrow. But there's other financial situations that the Commissioner is having reviews and discussions with OPM as well.
Yeah. And I'll answer that a little bit more clearly. So, sorry, Daryl, I don't mean that you weren't clear. So there's benefits to using that money in different ways to figure out what's the most impact for that, whether it's to simply put it into the trust fund or whether it's to pay interest on the trust fund. And I know I do see you shaking your head, but there's some analysis that we have done about the long-term benefit, and that's still being reviewed. And if you'd like, I can have Carl Gazzardi talk more specifically to that. But
excuse me, I don't mean to interrupt. The legislature decided where that money would go, and it's the legislature. You can certainly act in concert, but that would have to come back to the legislature. The legislature said, and we did the analysis on whether we would pay off interest or not. That long term, by paying down what we owe, creates less interest to be paid. And so before anybody makes any real decisions, that should come back to the legislature with discussion. You can bring your analysis, we have our analysis, but just to be really clear, the legislature said that would be to be paying down the debt that we owe the federal government. That would bring that down. If it's 500 plus or minus million that we owe, that would bring it down to $400 million, give or take. So we would want to be involved directly with those conversations. So that's my first question. So
Madam, yeah, I just want to say absolutely, and I will carry that message forward. I think that there's a lot to be considered there, because our analysis actually sounds like it's different than yours as far as the interest versus the balance. And there's also potentially additional sources of revenue for deposit into trust fund. And those are some of the things that are being looked at and reviewed right now, but I will absolutely bring forward the message that you would like to be involved in that conversation. The only thing that we are trying to do is make the biggest bang for the buck for the Connecticut residents and taxpayers. Certainly, same page you are. And if you'd like, Carl Gazzardi can give a little bit more substance to that.
I want to make sure everybody gets the chance to ask their questions, and I just want to say that the General Assembly decides where the ARPA funds go. That was decided in a bipartisan piece of legislation that we passed. And while I certainly appreciate your comments, the General Assembly is the one who decided that. So I want to go on to Representative Walker.
Thank you, Madam Chair. And I want to sort of underline what Senator Austin mentioned. This was an issue that came from the Appropriations Committee as we were building the budget, that we wanted the funds to be directly related to the biggest impact for the businesses and everything out there and pay off our debt. So I agree that we need to, if there is some thoughts about other ways of doing it, we'll be very happy to have another meeting and talk about it. But this was a bipartisan decision, and I will say that this was important. And I want to hold true to that commitment that we had when we started that. I'm going to ask a big favor, please. A lot of us are not knowledgeable on UI that much, and we're learning. So I would appreciate if you, instead of using alphabets, you use the name of whatever you're saying, so that we all can understand. Because it's hard to go and research EB or any of these other.
I didn't even realize. I'm sorry.
That's okay. I was going to say something while you were talking, but then I said I'll just wait till now. Now, could you just talk about a little bit about the payment for the overpayment for people who were getting funding at this time? You said something to the effect of that it depends on if people got PPP and then also UI. Can you just give a little bit more detail on that? Because I'm trying to see who has ownership and how much knowledge they had when they were getting these funds, because these are new funds that that were created during the pandemic in many ways, and so the regulations and rules were being written. And as we go forward with this, we have to also take responsibility that we didn't have some rules in place. And now people in Connecticut are terrified that there is clawback coming, and clawback to money that they don't have anymore. So I need to know a little bit more about the payment for overpayment and how that's going to affect it, how we're going to resolve that. And that's my one question, because I know that's a lot of information. And if you start talking over my head, I'm going to stop you and make you open up a little bit more. Okay, so go ahead.
I guess I'm finally fully incorporated into this agency, because I don't even know when I'm doing that anymore. So there's a variety of scenarios. I've just given you a couple, and we can certainly talk to more. One common scenario that resulted in an overpayment for someone is when they were laid off and they applied for unemployment benefits. Everything was deemed, eligible. They started receiving them, but their employer had also applied for I don't even know what the PPP was called.
Okay.
The PPP, right?
PPP is kind of common. Go ahead.
And they had applied for that. I think it was all, good intentions, but a lot came fast from the federal government, and a lot came with even rules later on. And so often employers would get that quite a bit after they had applied for it and had to lay folks off. So their people were getting benefits, and then the PPP came in, and then they had to reimburse. They paid their folks backdated pay, I guess. And now they had been paid twice for the same work week wages. And so that's an overpayment of unemployment insurance benefits, because in fact, the employer brought them back with the PPP and made them whole. And so the unemployment benefits have to be repaid. That's one scenario.
Okay, stop for a second. So I got unemployment because I was laid off, and then my business was able to get PPP loan from the government? Was it a loan or a grant, first of all? PPP. loan
Uh,
or grant?
That's DECD. So I'm not sure. Daryl, do you know loan or grant?
It's initially both, so it depends on the employer. Well, it depends on the employer and it depends on the situation. And then the loan could turn into a grant, which would mean it does not have to be paid back in certain categories, from my understanding in hearing from employers.
So
Yeah, and that's a good point because sometimes they didn't know. It was depending on how they used it and how, in what time frame. So it was
okay, so I got a PPP loan, and now I could turn it over into a grant, so I don't have to pay that back. However, my employees, because I paid them, trying to keep them still under my umbrella because I need my employees, I give them the money from that. But nobody communicated, and I'm not saying anything's wrong, but it's brand new. So nobody communicated to the businesses that anybody who got unemployment and they're getting PPP are double booking, double paying, whatever. Nobody really knew that until just recently. So am I quoting?
I honestly can't say if they did or not, but that would have been, we didn't distribute the PPP. And it's very, very, very clear when you're doing unemployment, like you have every single week, you have to certify questions. And so,
Right.
you were asked if you had wages for that particular week, and Daryl might be able to speak to more along the way. But when you're certifying, if you were to answer that you had received wages for that week, then there's a pause and a hold to try to limit the overpayments. So I don't know if I could even point to whose responsibility or whose fault. I don't know how one would determine that. It was very confusing for everyone at that time.
Well, the problem, I'm going to stop, but the problem I have is, again, this was something that was being built and designed for an unusual circumstance. We were trying to keep people above water. And now that we've gotten a little bit past that above water, then we're going back and saying, oh, we shouldn't have given you that money, but people were trying to survive. I understand that there are some things that we as a state can do in forgiving those circumstances because of the fact that people didn't know. They went out and bought food. They can't go back and claw back the food from the place when they got the money to this. So I really, I think this is something that's huge. And I think we need to come together on a decision that's going to be beneficial for all included. And I want to make sure that when we talk about loan versus grant, we look at that and make sure that if one person gets it as a grant, then everybody gets it as a grant, because then we have some subjective issues that are being made as to who gets a loan and who gets a grant. And that is a huge impact too. So I'll leave that one alone and let other people, and I may circle back after.
Madam Chair, may I just say, we don't disagree with you. I agree with you, actually, that the person who received all of this funding is not the person, they were in crisis and these programs were there for them. Mm-hmm. It's just, the problem is it's a federal issue. The feds and the federal delegation could change, if they so chose, what we're allowed to do and not. But it unfortunately doesn't lie at the state level. It's not, we're not able to make those changes. We don't have any mechanisms by which we could, a better term, blanketly, but that is something the feds and Congress absolutely could, I would think, enact change.
But I think we'll all work together on this. But I just want to make sure that we all understand it affects all of our communities dramatically. So, and by the way, if you're using the alphabet in any other answers, I'll interject.
Did I again?
Okay. Not yet. You got me staring at you. Okay. Thank you, Madam Chair.
Thank you, Representative Walker. Senator Minor.
Thank you, Madam Chairman. First of all, Commissioner, did I understand you correctly to say that at some point in the last 3 months, the Department of Labor used trust fund money to pay down federal debt on unemployment?
Yes.
All right. So I would offer the opinion that if you thought it was a good idea to do it once, somebody ought to take the ARPA funds that we directed for that very same purpose and make that payment so we're not accruing the interest that we're accruing. It shouldn't be up for debate. If you thought it was a wise decision once, I'm mystified that there would be some change either in the interest that we're being charged or the amount of interest that we would be earning on ARPA funds. We probably can't even earn interest on those funds in the account. So anyway, I'll just leave that. It was done once. Let's not fight about this. Let's just go back and appropriate the funds that we already directed for that purpose. The second thing is, I think there are probably some people in the state of Connecticut whose combined earnings of unemployment and the federal plus-up money may have been close to the cost of what it takes to kind of manage their household. But I think it's important for us to remember, and it was, over a year ago, that if you earned $15 in unemployment, you were eligible on a pay period basis for that plus-up money. So Representative Walker, Chairman Walker, I have a hard time feeling the same level of passion that you do about this clawback provision. People signed a lot of paperwork. Many of our family members that may have been on unemployment signed paperwork. They worked for employers that accepted PPP loans. Don't know what that acronym stands for, but in so doing, they had communication with employees. I happen to know in my family in another state, those opportunities were available, and they made commitments not to accept unemployment. They had to make a decision not to accept unemployment. I would hope that our congressional delegation would focus on other problems and really let this play itself out. And the Department of Labor should make determinations. And even if it takes people some time to pay it back, I don't know what they did with all the money, then let's let it work itself out. But there's nothing about this that was a mystery or should have been a mystery. People got a tremendous amount of money. And that's part of the reason why we don't have employees. We were paying them more to stay home than they could make going to work. And in some cases, apparently they double dipped. Maybe it was an accident. But I don't want myself to be listed in the camp of trying to advocate that somehow this all be forgiven. This is a tremendous amount of money in the state of Connecticut. So I appreciate the fact that the agency's separating what they believe to be fraud from an accident. And for those that are accidents, I just think there should be an effort to try and recollect, and not an effort to have our federal delegation say, don't worry about it, because somebody's got to pay this back. And if this somehow falls on federal taxes for business people to pay it back, the country's in enough trouble already financially. I'm not sure it would be headed in a better direction. So that wasn't a question. That was just trying to make sure that my voice was added to the pile. Thank you.
Thank you, Senator Minor. Representative France. And
Thank you, Madam Chair.
Representative France, if you wouldn't mind, I just wanted to introduce Representative Aurora, who is the ranking member on labor from the House Republicans. Thank you very much, sir, for joining us, and we'll get to you in due time. And on appropriations, we limit everybody to just 2 questions. Go back if we have time. Go ahead, Senator France.
Thank you, Madam Chair. And first question was, in light of the discussion related to unemployment and sort of the intersection of multiple federal programs and state program changes, I believe there was a part of the bill that was passed. It was an Office of the Unemployed Workers Advocate that was created by the legislature. And I guess the question is, what is the status of that? I think there were the advocate and 6 staff, I believe. And and how are they involved in helping the unemployed workers who are maybe going through this process we're talking about today and advocating for them? What is the status of that?
Yes, thank you, Representative France. So the status of that is we are working on getting that stood up. I know that the statute had said that it was to be effective October 1st. The legislation was written in a way that it was extremely narrowly defined credentials that a candidate needed to have. I have done search and informal search and interviewing. And I have shared with the governor's office the person that I would like to appoint, and I am waiting right now and working with them on making that happen.
I appreciate the answer. I guess my frustration from the legislative side would be we put an act in place to have it there, and it's 31 days ago. It's supposed to be active. And if you were having challenges with the narrow definition or some other construct that we created, why you didn't come back to us to ask that question, have it modified, or maybe you did, I wasn't aware. But just feedback, and certainly we are dealing with our residents that are walking through a process that is unlike past times of unemployment insurance usage. We need to expedite getting that office in place to help and advocate for them. I don't know if you have a comment on that.
Yeah, and if I maybe I said that in a way that it gave you a different interpretation. We worked very hard. I should have said we worked very hard to find someone who could, or a few people that I could actually interview, because having expertise in unemployment insurance and advocacy, and not being someone within the agency that I would pull from and deplete another area, was not easy to find. We worked very hard on that. I just wanted you to, I guess, know that it wasn't just pushed aside and disregarded. And we have a suggestion, and I am waiting for approval.
Thank you. Second question is, looking at some of the challenges that we dealt with last summer with as unemployment started to roll out, and the significant delays, and certainly the efforts between our offices and Department of Labor in advocating. Has there been any start of an investigation into looking at what the root cause of those problems were and the several contributing causes that may have been? Or what is your intention on doing that going forward ahead of the next legislative session, should there need to be action by the legislature to ensure that these problems don't resurrect themselves, taking into account there was significant greater demand on the system than we had ever had before?
Could you be a little bit more specific when you say investigation in these problems, just so I know what exactly you're referring to?
There seem to be significant delays in responding to unemployment claims by individuals that we had to then put a process in place where our staff was going directly to an advocate within DOL. I had complaints, as many other legislators did, that when people tried to intersect with the Department of Labor, they either got no return call, no response, and so they're left with forced to have their legislator advocate for them, which is not what I would expect from an agency that's supposed to serve the people of the state of Connecticut. What caused that? What is the remedy? How are we going to prevent that from happening in the future? What are the intersections related to or not to having people working remotely, their oversight, all those kinds of things that were unique to this situation, so that the legislature can understand the why of how it happened. It's kind of like the after action critique of the process and ensuring that Department of Labor is performing at its most efficient model, and using this as an opportunity to look at how that department functions and how we can improve the relationship with the citizens of the state of Connecticut that should not have to go to their legislature to have an office they pay for by their taxes serve them.
Okay, thank you for clarifying. So I kind of see this as two things. So one is the individual customer claimant on their own getting access to us, and the other is the legislature being able to get responses from our legislative liaison. I can tell you that honestly, this could be a meeting in and of itself, and I am more than open to doing that. If that is something that y'all would like, I genuinely am open to doing that. as far as an investigation and understanding, we have a full understanding of why the challenges happened, and the challenges happened because we did not go into this with a call center model. In 2016, that call center was disabled because it was not supported financially. There was no way to keep it going. There was layoffs and there was no money for maintenance of that. So then we were in a position with 35% fewer staff going into this pandemic than we had at that time. We had transitioned the model from the call center to in person in the American Job Center in 18 locations. That was working quite well. And it's actually a good thing, we think, to bring your unemployed into the American Job Centers where we can help and support them get reemployed. But the pandemic, no one anticipated being in a position not being able to have folks access us. So what we tried to do then is just, I think we only had about 5% of our agency that even had the ability to telework. So we had to get everybody teleworking. We set up a rudimentary phone line. I have to mention, this is why I say this could be a whole meeting. To do the rudimentary phone line, 25 lines, we also, in the meantime, had been decommissioned by our phone system, and our one person who did the phone system retired, and it all went over to DAS Best for the phone system. So it was like unbelievable to try to even get claimants access. Then we went ahead with the governor and OPM funded us to stand up a consumer contact center. And that also required that we brought on temporary staff. We had vendors. So I can go through, and I'm happy to, the progression. We now are at a point where we have added, so you start off with something called an MVP, and Representative Walker, that is the minimum viable product, which is the technology to stand up a consumer contact center telephone system. And we then had to get additional funding and support from OPM to be able, with CRF funds, to build enhancements to that, because at first, you couldn't get a call back, right? So we went through, then we had to do this virtual hold technology. There's been evolutions of this contact center to now. We now actually have, you can sign up online to schedule an appointment. You can call in. We just recently, a couple weeks ago, added a text feature. If you're calling from your cell phone, you can schedule via text a call back. You can stay online. So there's probably 6 different ways that you can get an appointment at your preferred time to talk to somebody. On Mondays, it's the highest volume, and usually part of Tuesdays. But by the time you get into the middle of the end of the week, you can get through immediately. I've had legislators reach out to us. I've gotten online. I've been able to say, okay, your person can call at 2 o'clock today. So that's a whole evolution that I can explain. I'm sorry. Go ahead, Representative.
No, I appreciate the high level overview, and what I guess I don't deny that there was actions taken to remedy the situation. And I won't speak for the Labor Committee, but as a member of the legislature, I certainly would want to understand that, see what actions Department of Labor has taken in response to what you've identified internally. And I would imagine there are probably still some things that are outstanding that may not be well understood, and that be presented from the Labor Committee. They have the expertise to understand and then make decisions on maybe there's a way to put a plan in place for these kinds of situations, though I don't anticipate in the near term. But I guess taking the process and time to write down and provide a report on the lessons learned and the actions taken by the Department of Labor to fix the problem, then provides for future use of future commissioners beyond yourself, as well as legislators, to understand what was learned, what was done, and then have a conversation about whether that was the most effective way, or whether it was just all that was available at the time, given the constraints that you were living under, and whether there's a better long-term plan. I think that's a useful discussion, that if you were able to provide a substantive report on what you just described to the Labor Committee, they can have a conversation with you about that and maybe identify some other things long-term that are better long-term solutions to the problem, as opposed to the things that you did to deal with the immediate crisis in front of you. That's all. Thank you.
So if the Labor Committee were to ask for that, I would certainly do that. I would beg for you to wait until session starts. We're still drinking from the fire hose, quite frankly. And as far as the getting back to the caucuses and individual legislators, we went into this with one legislative liaison. We've done a comparison about our staffing and other staffing, other agency staffing. I would love this, the opportunity to have someone else brought on. But in the meantime, I pulled an attorney who stopped doing legal work to help with the legislative liaison. She's now on the FML, the paid family medical leave work that we have to do by January. So she's no longer able to help with the constituency work. And 3 executive assistants at 50% of the time.
Commissioner, I just want to make sure that we're getting to everybody's questions.
Thank you very much. Thank you, Madam Chair.
Thank you very much. And the Appropriations Committee can also ask for that report, Representative France. And we would not wait for any reports until the beginning of session, just because then we would have to react and we would not get it back in time. But we'll work on that. I also want to say, Commissioner, when you talked about not being funded, that was a federal program that ended because our unemployment numbers were down. So that's why that funding was not done. It was not a Connecticut funding source that was dropped from you. That was a federal program. And so when you're talking about funding, please differentiate as you have in your revenues on federal issues. That was a federal program that ended, not a state program that ended. So up next is Senator Kushner, and I know she'll have something to say about the Labor Committee. Senator?
Thank you. Thank you, Senator Austin. Excuse me. Of course, I get a frog in my throat when it's my turn. First of all, I do want to thank the Commissioner for your comments here today. We did, as the Labor Committee, have an information hearing during the beginning of COVID, and a lot of information that Commissioner shared about the status of the fund and the staffing of the Department of Labor and the problems that they faced were explained to us at the time. And I think that there was good reason that we had such difficulty getting out the unemployment check. And you're not checking anymore. I understand that payments. And I think that we were in very close contact with the Department of Labor throughout the height of the crisis in getting unemployment payments to our constituents. And I know everyone in the Department of Labor worked very hard to answer our questions when we put them from the Labor Committee. So I appreciate that. I also want to acknowledge Representative Walker and your comments of passion you feel for the people who are now facing overpayment obligations. And I think we can't emphasize enough that many of our constituents are low-wage workers to begin with. And as was said, the money was spent and was needed to be spent just to have to provide resources. And over an extended period of time, to have to repay will really put them under again. And I think we have to look at every case. I know it's a very labor-intensive process that every case back into getting behind. And I think that I think we need to.
Senator Kushner, you're I don't know if it's just me. You're in and out. Yes, you are. And I don't think we're getting your whole question or your whole comment. So if you could.
Is this better when I get closer to the computer?
It is.
And I'm going to turn off the video so you don't have to see me so close.
Okay.
Is that better? I do want to say, and I was just acknowledging Representative Walker and her comments, because I think we need to work together to find some solutions. And I have 2 questions related to that, specifically on the overpayment. First of all, you mentioned, and I've heard this before, that one of the waivers can be equity and good conscience. And I'd like you to explain a little more of what goes into that.
I believe she's asking about the 8 reasons for the waivers. Is that, Madam Chair? I'm having a hard time hearing her.
Specifically, I was asking about the equity and good conscience. and what
okay.
that entails.
Okay, and thank you very much for your feedback and sharing how we had worked together. And I do want to say in response to Senator Austin, yes, there's definitely an issue around federal funding not supporting Connecticut in the way that they are able to support other states, in part because of fringe rate and other, but we did not have the unemployment insurance federal funding to continue with the call center. So as far as waivers, so they're granted, there's a legal term about equity and good conscience. So when it's against equity and good conscience to recover an overpayment from someone, these are the reasons that are reviewed. If securing full-time employment is severely limited as the result of physical or mental disability, poor health, or circumstances that would be detrimental to the claimant's employability. If benefits were overpaid due to a retroactive application of a legislative change, so if we were slow on changing that, if benefits were overpaid due to a gross administrative error, if benefits were overpaid due to a higher level decision, so for instance, a referee, a board, or a court reversing a prior decision, and adequate notice was not provided to the individual about the reversal. If it has been, I'm sorry, I have to read from these. If it's been established by evidence or statements that the individual substantially, detrimentally, or irreversibly changed such individual's position in reliance upon the receipt of unemployment compensation by foregoing receipt of any public welfare benefits for which they would have been entitled to, but for the receipt of unemployment compensation. Number 6 is if an individual A has been overpaid benefits in an amount equal to or greater than 2 times the individual's weekly benefit amount at the time the overpayment was made, or if the individual's annualized income does not exceed 150% of the poverty level. A little bit more to that. If the individual is deceased, and if the benefits were overpaid as a direct result of an employer's failure to respond timely or adequately to a request that the administrator, meaning us, for the information related to the individual's claim. Now, these are, it's really important that the claimants fill out the waiver request, because as I used one of the examples, it was often that during this time, employers did not respond to the notice we sent them right off the bat. And I think a lot of it was this, concept that they weren't held, their experience rate wouldn't be affected. But when they received their second notice, that was potentially what their experience rate would change to, because of it was done by executive orders and legislation and all that kind of stuff. So there was some uncertainty, then they would respond. So if a claimant was tied up in that, there was a potential that if they filled out a waiver, it would be waived. So,
that's helpful. And I think if you could send to our administrator that in writing, it would help all of us as legislators to understand it better. So I hope that we could receive that list. My second question goes to, and by the way, I do want to talk about PPP for a minute. That is the Paycheck Protection Plan. And my understanding, and we worked a lot with this at the beginning, is that if an employer used it for payroll, then they were forgiven. If they used it for other business reasons, they then would pay 1% interest on that money. So it was a very low cost loan. And I believe employers may have made different determinations about what best worked for them. And the employees often weren't aware of that. So I think I understand the interplay there is complicated. But I think, again, it's one that we need to examine what's the best solution to that situation. I know Saturday I met a woman who is a very low wage earner, received unemployment and now got a $30,000 payment bill, and the family is so scared about what's going to happen to them. And so, there are a lot of these individuals we're working with that we need to help. I guess my last question is about the federal requirements around repayment. If you talk a little more about that, because I understand that interplay between the state insurance trust fund and the federal government is always one of the elements that we're dealing with. But I would like to know if the state could potentially, in certain cases, make trust funds whole or pay the federal portion. What are the elements of that what are sort of the spectrum of solutions that we come up from the state to use ARPA funds to help offset costs, or other funds? Could you go into that a little more?
Senator Kushner, again, I'm sorry, but your connection is a little bit difficult. So what I think you asked, and please let me know if this is correct, you want to delve into whether ARPA funds can be used to support people who were supported under the PPP mechanism, the Paycheck Protection Program, that employers gave money directly to employees, and if we could use ARPA funds, is that correct?
Not just limited to the PPP, but to basically understand could the ARPA funds or any other state funds be used to make the federal government whole, such that we would not be required to make the individual make the repayment.
Okay, thank you. I just wanted to make sure.
Sure.
So, Commissioner, if you could get that back to us in writing so that, and again, go through our administrator, Susan Keene, that would be great. Senator Kushner, is that your total question?
Yes, thank you.
Thank you very much. I appreciate it. Commissioner, we're going to go, because we want that in writing. And I do have another 6 people that still have questions. So I really want to get their questions in the record.
I'm happy to stay on, but there was a couple points that I think, in all fairness, for those that are watching this recording, that I should respond to, if I might.
Okay, succinctly, please.
So as far as the 8 different waivers, that's not, I just want to clarify, it's not policy by us. That's actually in regs. So it's 31-273-4 of the regs. So, and I can certainly get that to you. I just want you to know it's not just like our policy. The other thing is, and we will get you the information that was just asked for, and if the administrator, Sue, would be able to send that to me in writing, because I got part of that. Regardless of the source of funding, we are not allowed federally to do anything except review individually every single overpayment but a waiver request must be completed individually for every single one. We have gone to USDOL, and they have very clearly said, and I will just succinctly read this, they have said that aside from the 2 blanket waiver provisions, which we can send you, states must evaluate each request on a case-by-case basis. So I don't have the authority, unfortunately, to do what you're asking, even if we had the funding.
We still would want to see that in writing, Commissioner. There is a lot of questions relative to what we can do to support some of these people.
Of course.
Thank you. So Representative Aurora, ranking member of Labor, and the members,
thank you so much for recognizing me and for participating in this Approps informational hearing. I have a couple of quick questions, and I'll try to keep them short. Thank you, Commissioner, for your remarks. My question is, can you build for us a very quick overview of what the UI fund is expected, order of magnitude, to collect and the surpluses in a normal year. And what I'm referring to is, I always think about the overall picture, big picture, because it's for all of you to, you're experts at the Department of Labor to figure out the exact details. Is if we collect $1 billion every year as the revenues, and I know it changes with experience ratings, and we on a typical year with the current 5% unemployment, we are expected to lay out 700 or 600. Are we going to be building surpluses of $3 or a couple hundred million? Or what's the order of magnitude of surplus every year you're expecting or projecting? Is there a projection you have which you can share with us legislators? Because as I see here is that you have suggested that our overall surpluses should be 200 million larger every year based upon the new legislation we passed, 130 million from collections, excess revenues, and 80 million from the benefit changes. So can you tell us as to how much we should expect in surpluses in the trust fund to first repay the debt and then build up a little cushion for a future emergency or a future slowdown, recession?
So what I would say is that I'm going to go to Carl Gazzardi, who is he's back with us. As you know, during the pandemic, we had to bring back some retirees. My tax director is currently he's away on vacation. So Carl is a former tax director. He's here with us. He's worked on that. And Carl, if you could speak to that as much as possible, and then we can get any remaining stuff in writing.
Yes, I can, Commissioner. So basically what we're looking to do under state statute is build a reserve in the unemployment insurance trust fund that allows the state to pay recessionary level benefits for 1 year without increasing revenues. Right now, that target is approximately $1.7 billion. So we, as Commissioner indicated earlier on in the presentation, we went into the pandemic at about $650 million, so considerably short of what the reserve balance should have been. All of the projections we've run to date, which take us through calendar year 2027, we do not approach solvency. But because of the public acts that were passed, 21-5 and 21-200, we look to build solvency moving forward before we get to that next recession. But the short answer is we're looking to establish a balance of approximately $1.7 billion that will enable us to pay recessionary level benefits when the time approaches.
Thank you, sir. Thank you very much for that answer. And that 1.7 billion is a number. We'd love to see details on that because in low interest rate environments, as long as we have some cushion, some would advocate that borrowing a little bit in a big recession like this, or in a big pandemic or recession, is not the worst thing. We'll build it back, hopefully in good times, very quickly. And that's what the point of my question was. How quickly do we pay back that 500 million? Because all of us here are very uncomfortable carrying a loan balance there. And I perhaps speak for myself and several of my colleagues. Once we get that loan balance paid, which is $500 million, if that's within a year, that's great. If that's within 5 years, we all feel pretty, or at least I would again speak for myself, I feel very that we need to do something better. So that's the question. How fast are we going to, in the normal course of business, pay back that 500 million balance, which we have right now? And I will leave that as a question to be answered later in the interest of time. My other very quick question is, what rate of interest are we paying on our federal balances? Because the federal government right now is borrowing at zero, exactly zero, or 10 basis points. So when I calculate 0% on 500 million should be zero, but obviously they are making some margin on it, looks like. So do you have it handy as to, on the 532 million, what percentage interest will we be paying right now in the next year?
Yes, currently the interest rate set by the federal government that all states are required to pay on federal trust fund balances is 2.2777%.
Well, they got a good margin on that thing, but that's what it is. And I thank you for answering my questions. I might have a couple others I might ask separately. And thank you, Madam Chair, for this opportunity.
Thank you, Representative. Representative Linsky, thank you very much for hanging in while the chairs and ranking members ask their questions. You are up first.
I apologize for interrupting, Senator, but we have a fire alarm in central office Weathersfield. We are evacuating the building. How would you like us to proceed?
Is that you too, Dante?
Central office
Unfortunately, it is.
Weathersfield.
I think
know
you're
what?
gonna have to, I think you have to comply with fire
Let me get on.
regulations.
I'll take my phone. Give me 2 minutes. I'll go outside with my phone.
Okay.
What? Hold on.
Senator Austin, I think
She's
it's
gonna
gonna be
come
hard
back
for
to
her.
the
I
phone.
think it's gonna be hard for her.
I know. Let's see what she wants to do. She asked us to hold on. Madam Administrator, could you mute Commissioner Bartolomeo's line, please?
Huh.
So we'll wait, Representative Walker, to see what she says.
Okay.
If we're not going to hear her, then we're just going to have to continue this another day, because we do have a number of people that have questions that have been waiting. And I think that that would give us additional time to read the documents that they sent over early this morning. So
Yes.
I'm a fast reader, but I don't read about 100 pages in a quick time frame. Just see what happens.
Madam Chair, just to be fair, the documents came to me Friday evening and I didn't see them.
It's okay.
That's fine.
Can you hear me?
Yes, we can hear you. Dante, this is going to be hard for you to do on the phone. Do you want to cancel to another date later on this week or early next week?
Well, I'll tell you what, I don't mind hanging on and trying right now. I've got folks who are taking care of the evacuation, and then we'll see how we can go. I might get back in. I don't know what's going on. I can try.
Okay, Representative Belinsky.
Thank you very much, Madam Chair. Thank you, Commissioner. You're a sport. You took us outside, and I appreciate that. I have just a couple of comments, more so than questions, but I just want to put my 2 cents in about how strongly I feel that we should not be increasing employer taxes at this point, because these are pandemic created claims. I don't believe that there's any more appropriate use of the ARP funds than to not just have stabilized folks that were unemployed, but to also to not have this unavoidable pandemic generated emergency come back and haunt the employers of the state of Connecticut for a decade as special assessments. So very strong feeling about that. I do support changes in the minimum qualified wage basis. And, Commissioner, congratulations on being named permanent commissioner at this point. As we went through this process earlier, 18 months ago and up until not all that long ago, I just want to acknowledge that the legislature played a very large role in constituent service, and glad to do so, considering that there were pandemic limitations to what you could do or what the department could do while you were not there yet. In the absence of having someplace to go to work and a phone system, you had some liaisons to us in the legislature that were tremendously helpful to our constituents. But as constituent service people, and our legislators on both sides of the aisle spent an awful lot of time and an awful lot of energy facilitating and trying to, to get timely responses to very, very urgent situations. So not too long ago, the legislature was cut out of the process of doing any facilitation. And, I feel that until we have a really good assurance that the call center situation, is what we expect it to be and has the adequacy to serve the taxpayers of the state of Connecticut, that refusing any offers of help in the form of constituent service coming from the legislators was not particularly the best idea. So I just want to also encourage you to view us as partners in this process, and know that your success as a commission is tremendously important to every single one of us and to our constituents. So going forward, well, I look forward to working closely with you, as do I'm pretty sure all of my counterparts, to make the system as robust and fair as we can make it. So thank you very much. Thank you, Madam Chair.
Thank you, Representative Belinsky. And I couldn't, excuse me, Commissioner, I couldn't agree with you more. And my office will continue to work for our constituents, because that's exactly what we do. Those comments duly noted. Next up is Representative Nolan.
I'm going to try. I'm not sure if you can hear me. My internet's acting a little wavy. Can you hear me?
We can hear you,
yes,
sir.
Okay. Commissioner, I was just, I'm not sure if the question was asked, because a lot of people are going in and out in regards to my reception here where I am. During COVID, there was loans, and then there were grants that were allowed. And I'm just wondering, for the employees that got loans and then turned around and gave their staff funding, and then for staff who got unemployment funds, is there a difference that would be so much of a hardship as to make those unemployment monies grants for those who got them?
I'm going to try to answer your question as I think it is. We did not, as Department of Labor, administer the PPP. That was done through the Department of Economic and Community Development and the federal government. We did the unemployment. We administer unemployment insurance benefits. There, as far as a grant or a loan, that's on the side of the PPP. The way that it affected claimants is if they had applied for unemployment benefits when they were first laid off, received unemployment benefits, then the employer received the PPP and distributed it as past wages. I don't know if that helps to answer your question. And I think actually, have I frozen?
No, you have not.
Okay.
You're all set.
I do feel strongly that I need to just respond to Representative Belinsky. And Representative, by no means did we do anything to intend to cut legislators out. We value that relationship. What we did do at one point in time, when we had to send 4 staff that were helping our legislative liaison back to their tasks, and one of them, in order to stand up the paid family medical leave appeals and the family medical leave appeals expansion from Public Act 19-25, when we went from 5 folks helping our legislative liaison to none, we had to ask that as many claimants as possible be sent directly to the contact center, because it was functioning quite well with all the additions that I mentioned. And we said any that you have difficulty with that are exceptionally challenging, that you certainly are more than happy, you're more than able to send those to our legislative liaison. By no means did we intend to cut you out, but to lessen the flow of those, because we do know that when the contact center was struggling, getting up and going, folks had to go to you as their only resort. Now they have an option of going to the contact center unless it's extremely complicated claim.
Thank you. Representative Nolan, did you have another question?
Yeah, I did. In regards to federal funds coming into the state of Connecticut, do we have a history of paying the lump sum to the federal government, and so that we wouldn't have a large interest rate?
So when there are loans taken, it is within the department's purview responsibility to make payments when there is funding accumulated within the trust fund from tax revenue and tax receipts. So the process of paying the $200 million out of the trust fund to the principal of the loan was completely standard. The question comes in when it is ARPA funds, and that's something I've been asked to explain and talk detailed about in the, at another time. I'm happy to have that conversation.
Yeah. Okay, because that would have been a question if we could use ARPA funds to pay that, and then, replenish the ARPA funds at a different time or something like that, just so we wouldn't have that balance. And so we would take care of things until we can figure out how we're going to make our constituents have to pay back. I think it's a difficult thing for us to do because this was a crisis that nobody was ready for. People chose to, I'm sure there were some people out there that chose to take monies knowing that they didn't have an option because of either being out of work or the crisis that they were in. So I just want to make sure that we're real careful how we are pulling money from people that have to pay it back so that we don't put them in further crisis regards to the funding. Thank you.
So,
Thank you.
Representative, I'm having a very hard time hearing you. It's going in and out, but I would say that every single claimant who has been sent information about a potential overpayment has been given a waiver that they can complete and send back to us for full evaluation of how that happened. And they do absolutely have due process.
Thank you, Madam Chair.
Thank you very much, Representative Nolan. Representative Dathan.
Very much, Madam Chair, and welcome on board, Commissioner. It's nice to see you. And thank you for bringing good support. I have several questions. I know my limit's 2, so I'm going to ask my 2, and I'm going to forward the other ones to our administrator. The first question, as I said, I wanted to ask was, does the agency do regular audits of the payments that are made under DOL? And if so, what is the percentage rate of errors as a result of this audit?
What kind of audit exactly do you mean? We have benefits,
Well,
we have tax, we have appeals.
Right. Now, just wondering in terms of regular payments being made to claimants, is there an audit process that is done over these claims as part of your regular procedures? Just kind of like a check, if you will, to make sure that all of the information is correct.
So I would say that we are highly audited internally as well as by the federal government. We have multiple audits going on with the state auditors as well as the Office of Inspector General. We do them ourselves internally. There are so many different audits going on. If you're speaking about, well, I don't know. I don't want to put words in your mouth. I don't know which area, but yes, we are undergoing many audits.
So my question was really around if you are regularly audited, what percentage of claims are there irregularities on an ongoing procedure, on an ongoing basis?
So I'm standing here with Deputy Daryl Dudinsky, and I think maybe BAM is what we should talk to. I will explain that acronym. But I'm going to just turn the phone over. Take off your mask. Hold on.
Hello. So yes, we have several internal audits, and most of them are mandated by the federal government, United States Department of Labor, as you would think. So I think the way I'm interpreting your question is, we have automated processes that run daily to quarterly. So for example, when an employer hires somebody or rehires somebody, they're required to report that new hire to the Department of Labor through sources. We utilize that information as you would want us to make sure that we are aware of this new hire, and we're trying to prevent that person from committing what would potentially be a fraudulent claim if they were to continue to file while working. We have prisoner cross match.
Sorry to interrupt you. My question was more of, do we have any metrics around irregularities for what's discovered during an audit process? Because I'd love to know sort of like the trend of these. Sorry to interrupt you. I just wanted to make sure I'm conscious of the time.
Exactly. And yes, we have our classifications. When we deem an overpaid week, we have to classify the cause and the reason, and we report that to the federal government, USDOL, United States Department of Labor. And from there, the United States Department of Labor compiles the breakout of where the state is having its highest percentage of overpaid claims. So prior to the pandemic, for an example, the highest level of overpaid claims were the fact that individuals were not seeking work. And we had to work through extensive processes and regulation change to incorporate an improvement there. And I think you've heard about that. So the second area would have been where people go back to work, but they don't report their earnings to us. And the employer, on the flip side, didn't fail to notify us of that new hire for us to take appropriate action. That's the second. During the pandemic, it flipped, and the highest percentage is folks that go back to work or are working and do not report their weekly earnings to us. That's the highest percentage at this point. But it's always a point in time to your review and an audit, and we examine the results of the federal government reports back to us on a quarterly basis. And we could be happy to share that with you.
If you
and that's
could share
public.
those metrics, that would be phenomenal.
Sure.
We'll follow up because I know you're not at your desk right now. But I would love to see sort of trends in those areas. My second question is, do we have any data about what other states are experiencing? I'm sure Connecticut's not the only one experiencing this right now. And would love to see if we have any data to compare this issue with other states. You probably don't have that to hand, and so we can follow up on that as well.
Sure. No, I understand the question, and the analysis that I was speaking to, that I think is in response to your question, would have a review of the whole country. And so the states and the territories, DC, Puerto Rico, et cetera. So we can, that's all public information. I would just, as we always report, and through the federal government, we do not compare state to state. And I know that's what you're asking, because every state has different laws and provisions. Like the commissioner was stating earlier, there are some states that have minimal or no waiver criteria. Connecticut is very fortunate, as the commissioner was reporting on 8. So it's not if you're going to look at states, you got to just be careful on what that state is doing and their laws, et cetera, and so forth. Hopefully that makes sense to you.
It does. Thank you so much. Thank you, Madam Chair.
Very much, Representative Dathan. And then when you send those questions, send them over to Madam Administrator so that we can send them all over. Senator Ciccarella.
Thank you. And thank you for answering all of these questions. Very informative. The first part of my questions would have been about kind of the employees. And I think a lot of those questions were answered for me in the Q&A and in your slideshow. I have a few questions from constituents, more on the employer side. And it seems as if the number of money that's going to be collected is kind of unknown for a few different reasons. But do we have any idea how that's going to affect the employers moving forward? I do understand, and I guess here's the question part, that the way of determining how much employers will pay into this unemployment fund, do we know how they're going to be affected and what those outcomes may look like? Did we kind of do any research to see what the cost would be, specifically an increase in businesses?
Do you mean by the new legislation, Public Act 21-200, how are the employers going to be affected? Is that what you're asking?
Yes, I guess, yes, but also considering that there's an unknown of about how much money we are going to get back to put into that fund. Will there be any changes to that legislation and or the equation, mathematical equation determining how much somebody may be paying in, specifically the employee?
Okay, so
I'm sorry, employer.
I'll do my best to answer that. I may ask Carl to jump on if he's, I assume he's out here somewhere. So there's a lot to be considered here, I guess. So the purpose of the legislation was to bring the trust fund towards solvency and also to do it in a way that kind of smoothed out the effect for different businesses on their experience rate on their taxes. So for instance, there are small businesses who were paying maybe proportionately a lot more and didn't use the system. And there are large businesses who, have an opportunity and are using the system a lot. So for instance, when you talk about, large construction firms who have to shut down during the winter and their employees go on unemployment, they're using the system quite frequently and they're paying in, but there's a maximum that is set. And so proportionately in the end, they're not paying as much as some employers who don't use it. So this was to bring it also into a line with usage. We did do for many companies while the legislation was being negotiated, we did do actual assessments on what they specifically have been paying and what they will pay. So, there were some employers who were very happy with this bill, and there are other employers who are not happy with this bill. And it really depends upon how much they are using the system and whether or not they've been paying the same amount per employee as other businesses. I don't know if that's all of what you were asking. I'm sorry.
So no, that actually was very informative. But so taking into consideration the unknown amount of money that we're going to be hopefully receiving back from possible errors or fraudulent claims, is that going to have any effect in that? That's, I guess, a question. Would you be able to answer that?
I think what you're saying is as we recover funds and they go back into the trust fund, is that going to change? So the legislation, I don't know how to answer that for you. Hold on one second. Yeah, I'm not sure how.
Hi, our fire alarm, I think, is over, so we're heading back into the building. But this is, so what the commissioner is reporting is that as we recover overpayments, depending on where that overpayment occurred, which program, the monies will then be applied. So as money's coming in as recovery, we have to apply those back to the programs in which they were paid out. For your perspective, I believe you're talking about trust funds. So when overpayments that were paid out on state unemployment insurance, the employer funded program, it would go back into that UI trust fund, and it would definitely help support the employers on the contributions, because we'll get $1 closer to solvency. And I just want to also point out in the prior dialogue, when I think it was Representative Aurora, the balance of the overpayment.
Hold 1 second, folks.
We're going to switch over.
Bring that up. Just bring that up.
Uh-oh. I think Dante hung up on both of them. Deputy Commissioner, you're on there. Oh, there she is. Dante, you're there. You just have to unmute.
Go ahead. Okay, can you hear me?
Yes.
Okay, thank you. So again, just to repeat, as the monies are recovered from an individual that has an overpayment, it will be applied back to the program in which was initially paid out. So, and as you know, there's several. And I just want to reiterate that the current loan is north of 500 million, but today we're back to borrowing. So the premise the past month was to allow that payment to go down so that the interest accruing is minimized, but we are back to borrowing. So it's not a loan where we have to pay back 500 plus million. It's growing, and it will continue weekly. The fourth quarter of 21 for employer contributions is due in January. It's the lowest revenue quarter, so we'll get minimal payments into the trust fund there, and then January, February, March is due in April, and that's the largest quarter of contributions that go back into the trust fund. So, this is ebb and flow. This is a variable, and we're giving projections. You heard from Carl Gazzardi and the commissioner. These are projections, and it all depends on the state of the economy and so forth. So hopefully that makes sense, and just allowing a little bit more clarification.
Very good. Thank you. That does make sense. Thank you.
Senator Ciccarello, do you have another question?
Sorry, my dog's barking in the background, the cons of working from home. I'm all set. Thank you very much.
Thank you, sir. Representative Johnson.
Thank you so much, Madam Chair, and thank you, Commissioner Bartolomeo. Good work, and I appreciate all the things everybody's doing in the Department of Labor. My question has to do with the nonprofit organizations, and apparently, are they in this payment protection plan that reimbursement purposes that they're supposed to have the reimbursement provided in circumstances where it's a private sector or a for-profit entity, but if it's a nonprofit entity, there is a problem with the reimbursement. And am I asking this to the correct department?
I'm sorry, Representative, that's actually, that would be going through the Department of Community Economic Development.
Okay, that was my question in part. So thank you so much for your work and thanks for your answer. Thank you, Madam Chair.
Thank you very much. Representative McCarty.
Yes, thank you very much, Madam Chair, and very, very quickly, thank you, Commissioner. This was very informative, but I don't think the question was asked today. If we look at the unemployment benefit claims that went out, you did quote a figure a little, I think it was in the $9 million area. Do we know how stable the figure is, and could we expect that to grow? And then finally, would we be able to receive some sort of breakdown as to the level that the claimants put in? I know it varies from a small amount way up into approximately $30,000 per claimant. So I'm just curious as if we have any more information and how stable the unemployment benefits that were overpaid, what that figure is, what that actual figure might be. Thank you.
Sure. Thank you, Representative. I'm a little thrown by the 9 million figure. I think what you're talking about is thus far during the pandemic, we have administered and paid out $9.98 billion in benefits. I think that was the only kind of 9 that we were talking about. The overpayments, more specifically, what is your question for the overpayments?
Yeah, that I'm curious about the overpayments, and I had a figure that we had overpayments for those benefits in trying to determine what the actual number might be, and that we may only have a snapshot right now, that figure could continue to grow. And so I'm just curious as to where we are right now with that and what your estimate might be going forward.
Thank you for clarifying. So what we know right now is that when we look at we tried to determine the quarters that would most appropriately align with pandemic payments, because overpayments can be on the books for up to 8 years right now. So, you know, so we looked at fourth quarter of 20, first quarter of 21, second quarter of 21. During that period of time, when we're looking at the programs, it's not all of the programs yet, because some of the programs like PUA have not, didn't have the ability to report out on that yet. That'll be coming. So we know that there are right now a total of about 30 million, about 2% of the claims out of 13,000. So that translates, that 2% of claims that we found with overpayments translates into about $30 million. That would be about 10 million state, therefore trust fund, employer taxes, and then about 20 million federal. So that would be like your additional 300 and 600. I can't stress enough, I guess, though, this is what we have right now established. This will grow. We do have, you know, we are working on the pandemic volume and reviewing and establishing overpayments. It is really important for anyone who is receiving an overpayment notification, if they have extenuating circumstances, to fill out that waiver form that they get in English and Spanish and send it back to us. That's the process. But we have a lot more to come. A lot more.
And I do appreciate those comments, and thank you very much for hanging in here today. I know it was not easy. Thank you.
The cold felt good.
Actually, not that cold out. Kind of comfortable for November 1st, quite frankly.
I didn't have my jacket, Senator. Only had my sweater.
I just have a sweater on. I'm sitting outside the whole time. No jacket.
It looks nice and fuzzy.
It is. So I just want to say I have a couple of other questions that I want. If you could send us the number of people that have current pending appeals and the geographical location where they are from, that would be very helpful for us. I know that I sent a letter on that a little bit ago, so whatever we have on that, that would be wonderful. Send that to the Madam Administrator so that we can get that. The other question that or sort of statement is that I consider any constituent that calls me to have a complicated issue with DOL because they've not been able to get the answer already through the contact center. Please prepare for us a list of positions that are not filled right now. How many positions that we already authorized in the last budget that are not filled right now, and where we are in that process. Where are we? So that we all understand when we talk with the Department of Administrative Services in just the next week or so, what is going on with hiring people, so that we can say, hey, listen, these people are not hired, and thus we have had to limit services to people. So if you could get that to us as soon as possible, that would be wonderful. We will have a number of other questions going over to you from people who are on the call right now, and other members of the Appropriations Committee who could not make it today. And we really do appreciate you coming on today. It's been very helpful. We will know that this puts additional burdens on you, but it's something that we need in order to address the issue. And lastly, if you could send us the detail that you have on the unemployment trust fund and your calculations so that we can review them with OFA. We really appreciate that. Representative Walker?
No, I just want to thank Commissioner for being a real trooper in this, going back and forth. And even if you had a jacket, it's still a little chilly out. Kathy's just used to living out in the woods, so it's okay. But thank you so much for really answering our questions. And there are a lot more questions, and I'm sure we'll get more answers to that. And thanks everybody for indulging everybody with the opportunity, even those of us who are still learning about unemployment. So thank you very much.
Representative France.
Thank you, Madam Chair. And I want to thank the commissioner for taking the time with her team to come in here and answer the questions, and look forward to the additional answers we'll get from the questions that will be forwarded to you. Thank you very much, Commissioner.
I know that Senator Minor said he had to pop off. I don't know if he came back on. If he is on, fine. But I know he had other legislative business to attend to. Senator Kushner.
Thank you. I hope you can hear me, Commissioner. I really appreciate you being with us today and the hard work that you all are doing. I do look forward to working with you and the chairs of Appropriations and my good friend and co-chair Representative Porter on solutions for these overpayments. And I think we can and have an obligation to look out for what's best for folks, and we want to work with you on that.
Representative Porter.
Thank you, Madam Chair. Thank you, Dante. You continue to do a good job. I've always stood with DOL. I understand the challenges, and I really do appreciate you and your team delivering a very informative panel for us this morning. And as Senator Kushner said, we look forward to working with you to gain some resolve for the people who legitimately, not fraudulently, but legitimately were overpaid. We don't feel that it should be a burden, and we definitely should look at ways to relieve them of that burden, especially that we're not post-pandemic yet. You know, we've helped out many people, you know, in their times of need, actually corporations. And I just want us to make sure that we extend that same kind of courtesy and this dire need to the workers who kept this state open and kept our economy going during a time when we all were able to stay home and stay safe. So thank you all again. Thank you, Madam Chair.
Thank you. Representative Aurora, any final comments, sir?
Thank you so much, Commissioner, for this excellent informational session. I think it's very clear that we have some work to do, both in terms of making sure that the trust fund is made solvent, but at the same time ensure that the employers at this time are not overburdened, because we want a good, strong recovery. And I also want to echo another point made earlier, is that we want to go back and see how we can improve the service level when we are under more pressure with a larger number of applicants. And I congratulate, or I thank you for the extra effort which all of you put in. But at the same time, I think it is still important to go back and learn from what happened. And why the response times from our for the UI program became much longer. So thank you once again, and we look forward to working together to address these issues.
And Madam Administrator, if you could send Representative Aurora all of the documents that we received from DOL, that would be, I don't think he received those as he's not on Appropriations.
I'd be happy to, Madam Chair.
Thank you very much. Commissioner, thank you very much. Deputy Commissioner and all the staff from the Department of Labor, we appreciate your comments, and we look forward to getting that information. And Commissioner, I see your hand is up. Go ahead.
Yes, thank you. I want to take the opportunity to thank all of you. I really do appreciate how hard you're working. I've been there working for the constituents at your level. Trust me, we feel the same about our customers and claimants as you feel about your constituents. We talk to them, we hear their stories, and we empathize. We are within legal constraints, as you know, but I look forward to working with y'all to see where things can be adjusted. I do want to say, especially to Representative Aurora's comments just now, we assess and reassess constantly. I do think one thing that hasn't been brought up today that's extremely important is we are approaching 2022, during which we're going to be deploying the new modernized system. There's going to be challenges before there's success or ease. So we know that starting June 22nd, we are going to have to shut our system for a week to be able to launch the new system July 1st. And we are going to be under some really intense evaluation, testing, working out the bugs. So, when I say before, we are still drinking from that fire hose. Trust me, we are. I will always take the opportunity, if anyone is interested, to sit down and have like a little working group on laying out exactly where we are, what we're doing, where we're going, and so that you have more information about why there are challenges at times with, all the things we talked about. I'm happy. I'm available. Even come and sit in our conference room, and we'll sit down and put it all out on paper with you. So thank you again for the opportunity.
Thank you. Have a wonderful day, everybody. Madam Administrator, when are we meeting again?
We are meeting on November 22nd with the Department of Administrative Services to talk about HR consolidation and operations. And before we go, Madam Chair, I just want to alert members who are on and anyone who may be listening, members who may be listening, that they'll be receiving an email from me shortly. I'm going to request that if you have follow-up questions, even if you have articulated them on during this forum, but if you have follow-up questions for the Department of Labor, if you could send them to me via email in writing so I can collect them all and we can send one document over to the department with our requests for follow-up information.
Thank you very much, Madam Administrator. And just so our colleagues on appropriations know, Representative Walker and I are planning on meeting with 5 workforce investment boards to talk about challenges relative to jobs. And then after that, with the Governor's Workforce Council to see where the dollars have been spent and what are the plans to increase our state workforce. So those will be other areas that we will be talking with before the end of the year. Thank you all. Have a wonderful day.
Thank you.